So, if you're a small business owner, you know the grind. You are putting in all the hours, you're working so hard, but then you look at your finances and it just feels, well, like chaos. Today, we're going to walk through how to build a simple system to turn all that financial stress into genuine confidence and control. And let's get one thing straight right off the bat. This is not about you not working hard enough. I mean, look at this quote. The problem is almost never the effort you're putting in. It's all about the system, or, maybe the lack of one, that's keeping you from having that real financial clarity. Okay, so where do we even begin to build that system? Well, it all starts with this one foundational concept that honestly trips up so many entrepreneurs. You've got to understand that for most of us, our business and our personal taxes are completely connected. They're two sides of the very same coin. And that's the whole deal right there. It doesn't matter if you're an LLC taxed as a sole prop or even an S-Corp. The profit you work so hard to make, it doesn't just stay in some imaginary business bubble. Nope. It flows directly onto your personal Form 1040, and that has huge implications for how much money you actually get to keep. Just look at this slide because it shows you exactly why your business structure is such a massive strategic decision. Over on the left, as a standard LLC, that entire $90,000 profit gets hammered with both income tax and self-employment tax. Now look at the S-Corp on the right. Here, you pay yourself a reasonable salary, in this case, 60 grand, which gets payroll taxes. But the other 60 grand, you can take that as a distribution, which is not subject to that same self-employment tax. That one little difference can literally translate into thousands of dollars in tax savings. All right, we've talked about strategies, so now let's talk about the rules. And listen, this part isn't meant to scare you. It's about knowing the rules of the road so you can drive your business with confidence and, avoid any trouble. And the first big rule is this one. As a business owner, you don't have a W-2 where an employer withholds taxes for you. The government expects you to pay as you go. So the big question is, are you making those quarterly estimated tax payments? So many business owners fall into these common traps. They either skip payments altogether, or they underpay, or they make this classic mistake of thinking their spouse's W-2 withholding will cover their business income, which, spoiler alert, it almost never does. What it boils down to is this. The IRS wants its money as you earn it. If you don't plan for that, you're not just looking at a big bill in April. You're looking at penalties and interest that can turn a manageable tax bill into a really serious debt. And if you want to know what gets the IRS's attention, it's payroll. Nothing stands out like payroll issues. Things like a late tax deposit, not filing your quarterly forms, or, like we just talked about, paying yourself a ridiculously low salary in an S-Corp. To you, it might seem like a small mistake. To the IRS, it looks like you're trying to dodge your obligations, and that puts your business right under the microscope. And here's why you have to take this so seriously. The IRS sees payroll tax as their money. You're just holding onto it for them. So when it's late, to them, it's pretty much theft. The penalties are harsh, they add up incredibly fast, and the IRS almost never forgives them. This is the one area of your finances where you absolutely cannot afford to mess up. Okay, enough defense. Let's switch it up and go on offense. Once you get the compliance stuff handled, you can start being proactive and legally lowering your tax bill. This is about taking control of your tax outcome, not just reacting to whatever happens. And here are 3 really powerful ways to do just that. First up, timing. Buying that new computer in December instead of waiting till January can pull a big deduction into this year. Second, documentation. You can absolutely deduct things like your home office and vehicle use, but if you can't prove it with good records, that deduction could get thrown out in an audit. And third, retirement. Contributing to a SEP IRA or a solo 401k is a total double win. You lower your taxable income today, and you build wealth for your future. So what's the common thread through all of those awesome strategies? Well, it's this right here. Your deductions are only as solid as the records you keep. Good bookkeeping isn't just some boring chore. It's the shield that protects every single tax-saving move you make. And all of this, the tax strategy, the compliance, the deductions, it all brings us to the real heart of the matter. The one thing that holds it all together, the true foundation for control and for growth, is your financial system. But why? Why does having clean books really matter? Because if you think the only reason to do it is to file your taxes once a year, oh man, you are missing out on the real power they can give you. Because this is the real payoff. Clean financials are what let you walk into a bank and confidently ask for a loan. They're what you show a potential partner to prove your business is a solid bet. They give you the actual data you need to price your services so you can make a real profit. And yeah, they are your #1 best defense if you ever get audited. Clean books are the key that unlocks your business's future. And look, when I say system, please don't think this has to be some crazy, complicated thing. It's not. It's just a simple, repeatable process for tracking your money. It's about using the right tools, things like automated payroll, a receipt capture app, bank feeds, and then just committing to look at your numbers on a regular basis so there are no big surprises. So let's bring this all home. We've looked at all the different pieces, and now you can see the full transformation. This is about making that journey from a constant state of financial chaos to a place of calm, predictable confidence. This slide just sums it up perfectly, doesn't it? Over on the left, that's chaos. You're reactive, you're stressed, you're always getting hit with surprises, and your business is basically limited by the mess. But on the right, with a simple system, you become proactive. You're in control. You've got predictable cash flow, and you can make decisions with confidence. Your business isn't trapped anymore. It's ready for any opportunity that comes along. And that's the whole point, right? The goal of a good financial system isn't to create more paperwork for you. It's the total opposite. It's about having a system that does the heavy lifting for you, so you can have the one thing every business owner really truly wants: peace of mind. And that leads me to the final question I want to leave you with. When you think about your finances, are you just building a system to survive tax season once a year? Or are you building a system that actually supports the business and the life you really want to create? The choice and the control, it's all yours.